Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment the market is testing a quite strong level of monthly demand and support. In fact, from here, all this previous rejection to the upside was created. At the moment, the market is testing this exact same zone. So there is definitely the possibility to see some bullish price action being created away from this level. We can also notice that from a pattern standpoint, we have a very clear impulse followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 Fibonacci retracement that is lining up precisely with this previous level of support and demand, therefore creating a confluence of support. And inside of a confluence of support zone, you could expect to see more institutional longing, which at that point would further increase the probabilities of a potential push higher away from this area. We can also notice that if we look at the bigger pattern, here the market has been creating in inverted head and shoulders. We can notice, in fact, the left shoulder here, the head here, and the right shoulder here. So again, more bullish price action seems possible from this level. Going down on the weekly time frame, what do we see? Well, from a weekly perspective, we can notice how at the moment the market is testing support. In fact, from a weekly perspective, this area was first respected as support here, then respected as resistance here. Then the market broke back above that zone. And what we know is that in the market, previous resistance, once it is broken to the upside, becomes support, and previous support, once it is broken to the downside, becomes resistance. That is why this level was first acting as support here, then acting as resistance here, and then when the market broke it to the upside, once again, it started acting as support here. And at the moment, the market is testing the exact same level. Therefore, we have good probabilities from here to see some bullish price action being created. Going down on the daily time frame, what do we see? Well, from a daily standpoint, what we can notice is that in creating this move to the downside, the market has also created this M pattern. And in general, after the creation of an M pattern, what we could expect is to see a potential push higher, completing the M pattern at the neckline, which is essentially the previous support turned resistance from a daily standpoint. So here on the daily time frame, there is the possibility for this market to reject this level to the upside, which is support on the monthly and weekly time frames, and also complete this daily M pattern. Now, if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, we can notice how even though net positions are decreasing, with the last report, already institutions have now started closing their shorts. We can see 6.2k shorts getting closed. And with the new report that is coming out in just a couple of days, we should see now also longs getting added, since institutions know that this level is a confluence of support zone and there is a good probability of a potential push higher. So we could definitely expect some potential institutional longing inside of this confluence of support zone. So if we see that institutional longing, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, What I would expect is that if this market would shift from an intraday bearish to a bullish market and we start to see more institutional longing, I definitely would not be surprised to see a potential push higher, completing this daily M pattern. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.